Welcome to yet another episode under the bi-monthly webinar series of Get More from Mallapuram. And the very intention of doing all this webinar series is only to provide clarity such that you will have confidence on whatever the policies which you have already purchased or which you are planning to purchase. Okay, so that's the real reason why we started this webinar series, and we thank all the people who are consistently supporting us and motivating us in doing this webinar series on a consistent basis. And welcome to the 29th episode in a row. Consistently we are doing this, and thanks a lot for continuous participation and being with us. Okay, so even before we get into today's topic of the day, let us actually do the declarations which we have been doing since last 28 episodes. Okay, so let us now get through our declarations. So the first thing is about whatever the things that we are going to discuss here. It is all going to be only with the insurance, and we are not going to represent any one insurance company. Okay, so we don't represent any insurance company under this webinar series, and we'll be discussing issues related to only insurance. So no politics and no movies, nothing, right? And at the same time, we are not intended to criticize any particular person or a product or an insurance company through this webinar series. But if it happens, it is only by chance, but we are not intended to do that. And the points whatever we are going to discuss here is absolutely personal, and it can't be taken as an evidence under any court of law. Okay, so with these declarations, let us now get into today's topic of the day. And today's topic is, what are those 10 non-payable claims? The non-payable claims in the personal accident policy. Okay, you might have actually seen people saying about the claims payable under the insurance policies, but let us understand it with a contra of what are the claims which are not payable, in what conditions it is actually not going to be paid under the personal accident policy. Okay, are you with me? So let's now get into the agenda. The agenda is going to be like this. Okay, so first we'll be doing a little bit of situation analysis, right, wherein we'll also see through what are the different kinds of coverages that we have, okay, and how people actually plan to go and have their personal accident policy. Okay, then we'll be also doing a clarity for confidence discussion. So this is the main section under which we'll discuss about all those 10 non-payable claims under the personal accident policy. So in what situations the claims are going to be denied or it is not going to be paid. Okay, right? And at the same time, then we'll get into the another section called think tank, when we'll give a little more information about the policy on which we are discussing, that is on personal accident policy, wherein it helps you to choose the right kind of product which is available in the market. Okay, and at the same time we'll get into the action points. Knowing is only just the first step, but knowing the knowledge and then implementing it for the benefit of ourselves and for our families, the loved ones, right? So that's where the real implementation comes in. So we are going through the action points one by one. Okay, what is that you are going to do after this webinar, right? And during this webinar, you will have a very clear-cut clarity on the top 10 situations wherein the claims will not be payable under the personal accident policy. Okay, are you with me? Yes, if it is yes, we request you to please type yes in the chat box. Oh, thank you for actually responding to our request, and let's now get into the topic, right? So let us do the situation analysis. Generally, if you actually look into the situation wherein the claim comes up in a personal accident policy, most of the times we have seen some broken arm or broken leg, or sometimes even the death can also happen, right? So the death or the disability, these are the two major things which can happen, and the disability can be for permanent disability, or it could be permanent but for a for a temporary period. So it's a temporary total disability, or permanent partial disability, or permanent total disability. So these are three kinds of disabilities which can actually come in. Okay, so in case of the accidental situation which comes in, the family is put up in a fix, like there could be a death or there could be disability. And in either of these two situations, it is seen that the income level of the family drastically drops down, unless there is a regular source of unearned income for the family. But otherwise, the claim will make sure, will actually put the family in a situation wherein their regular income will keep coming down, or it just stops, right? So in this situation, even there will be no income which will be coming in, and there is an additional expenditure which crops up because of the medicines which need to be used, or some hospitalization because of which it actually happens, or some operation need to be conducted for which the family need to accumulate the money from the various sources and then pay it to the hospital, right? So these are the situations which do come up. And if it is a permanent disability, it is going to be even worse, because the person is going to live through the disability, and at the same time his income is also lost. The medical expenses also got increased. So there should be a regular source of income to the family coming in this particular situation. Okay, so at least the minimum requirements of the day-to-day expenses, and probably the EMI kind of things, the loans which are outstanding, which the earning member need to pay it off, right? And of course, even the medical expenses which they have to take care. So if you look into this particular situation, how much should be the coverage required in an accidental policy? If you actually look into that as a case study, if you look at, okay, so as a case study, if you look through this situation, let us analyze it. Okay, the first thing is, if here is an example which we are showing. We have also discussed the similar example in the earlier webinar episode of personal accident plan. So we are just repeating it for the better understanding of the situation, which actually intensifies the real requirement of the regular income for the family. Okay, so let's take a small family, 2 adults, 2 children, right? Where the basic needs, if you look at, there's an expenses of almost 15,000 rupees for this family, right? And the children's education almost another 5,000 rupees per month, right? And miscellaneous travel expenses for the family is about, say, 5,000. And luckily there are no EMIs. Okay, luckily there are no EMIs. So in this situation, there should be a minimum amount which should be coming into the family of 25,000 rupees on a monthly basis, right? It is on a monthly basis. So how much should the minimum coverage for this earning member in this family? If we actually take the guaranteed interest rate, the interest which is earned out of the guaranteed lump sum money which is put up into an investment, if you actually look into that, okay, it is almost, say, around 6%. If you look at, then they need to have a 50 lakhs of corpus which need to be invested at the rate of 6% interest. Then that will generate 25,000 rupees per month for the family for the entire life, unless there is a reduction in the interest rate. Okay, that means if you actually look at the coverage part, it is almost 200 times of the income, the regular income requirement of the family is the coverage what we need to look into. Let's take another example. Okay, in the case 2, if you actually look at, if the income requirement for the basic needs is, say, 20,000 rupees, and there is also another 5,000 rupees additional amount which is in there for the loan EMI. Okay, in this situation, so it is 35,000 rupees per month is what the regular income which is required. So if you look into the total amount of sum assured, the total amount of sum assured which This family, the second family, need to look for is 70 lakh rupees. Even that is coming to 200 times of the monthly income which is required. Even if you actually look through the third case study, wherein there is a 30,000 rupees of say loan EMI and a 20,000 of regular expenses, the basic needs which are there for the family. In this situation, it is 70,000 rupees is the regular income which is required. So the coverage need to be almost 1 crore 40 lakhs. So 1 crore 40 lakhs deposited into the fund, right? And they generate 6% rate of return, right? At the same time, say outstanding loan liabilities is say around 10,000 rupees, if you actually, 10 lakhs if you actually look at, almost close to around 1 crore 50 lakhs of coverage is what is required. Okay, so 200 times of your monthly income. Okay, the minimum cover which is required is 200 times of your monthly income which is required for a particular family. Now the situation is you have planned everything, okay, and you have paid your premium, you got your coverage, but say suppose there is a claim, okay, then what is the situation? The situation is everything looks really excellent. Everything looks really excellent until the claim comes in. Okay, and it's not just the claim which is coming in. If the claim is repudiated or the claim is non-payable, then all this planning of taking the policy, paying the premium, and analyzing what is the minimum sum assured which is required, everything goes for a toss once the claim is not payable. Okay, let's discuss with the clarity such that you will have confidence on whatever the policies which you have already purchased or which you are planning to purchase. This is the second section under which we'll be discussing those 10 non-payable situations of claim in any personal accident policy. Are you ready with me? If yes, just type in yes in the chat box. Oh, thank you. Thanks a lot. Thanks a lot for keying in your response, and you're so nice people. You have been so motivating for us, and it's so nice to have all you people on this live webinar. Okay, so let's discuss those 10 non-payable claims. The first thing, and the first situation is wrong risk group selection. Now, say suppose the person is say suppose he is a driver, right? He's a driver. He's a taxi driver, or he's an auto driver, or he's a heavy vehicle driver, or he's a commercial vehicle driver, or he's a contractor plant and machinery driver, right? Or an operator, right? So the risk group classification, just if you go out and then ask for a reduced premiums, so what they would have actually done, they would have selected your risk group, your occupational risk group, in a situation wherein the risk is very less. Okay, now if you look into any personal accident policy, there are three kinds of risk which have been available. Okay, risk group classifications, what they do. One is an administrative kind of work. Okay, and then we will have something like wherein we call it as risk group A, wherein all the administrative work, even the marketing and sales people, they are all involved. They are all grouped into this risk group A. That's a category 1. Okay, wherein the assumed risk is comparatively less, or the lowest risk group people. Okay, now we also have the second group, which is called risk group B, or the category B, right? In this category B, all the manually involved people, like the labor, the machinery operator, the drivers, and all these people who are involved in a manual work, wherein their main source of income is coming only out of their skill set of manual work. Those are the people who have been classified under this risk group 2 or the risk group B, the category B. Okay. Now, there is also another risk group which is called category C, wherein the people who are working above the ground level, that is on the heights, and below the ground level. That means in a situation wherein they are getting into the tunneling work or any digging work, right, which is below the ground level. So above the ground level and below the ground level. If they are working in these conditions, or it could be even the pilots. Okay. So all these people, they come under risk group 3, risk group C or category C. Okay. Say suppose, it is very good if you select the right kind of risk group. But say suppose you belong to risk group B, but you have selected risk group A to have a better premium and in your policy. And tomorrow there is a claim. But because there is a claim and these people, you have actually paid a premium which is related to category A group, category risk group A group, but you are under category B, then the claim is not payable. Then the claim is not payable because the insurance underwriter is assuming you with a specified risk classification, occupational risk classification, and he will be charging premium accordingly. So paying a smaller premium doesn't matter until there is a claim. If the claim comes up, that's when it matters whether you have chosen the right kind of risk group or not. If you have not chosen the right kind of risk group, even though you paid the premium, the claim is not payable. So selecting the risk group is something which is very, very vital in actually getting your claim. And all those situations wherein the claims are not payable, most of the situations in a personal accident policy comes in with the first reason, that is selecting the wrong risk group. Okay, are you clear with this? Right? So let's go to the next situation. The second situation, if you look at, okay, and all the second situations, we are looking at the self-inflicting injury. If there is any situation of self-inflicting injury, that means if we have done any injury to ourselves, by ourselves, okay, or intentionally if something is done onto us knowingly, right, then it is not an accident. Rather, it becomes a suicide. Okay, the situation wherein it comes up is like somebody has drunken driven his vehicle and then met with an accident and he's now no more. And because it is proven that he's drunken driven, the claim is not payable. If somebody has attempted a suicide, okay, he attempted a suicide, but he was not successful enough. Okay, so you can't picture it as an accident and then claim. Even if you claim, the claim is not payable. It becomes a non-payable claim. Okay. Now the third thing is really interesting. Okay, so because we have actually seen a claim in our past experience wherein somebody was actually fasting. They were actually fasting because of their religious, some good days were there. So some religious culture which they were actually following. So because of the fasting what they were in, they have become anemic, and they were actually still working on the workflow. Okay, and they just fell. They just fell unconscious, and they fell on an missionary. Wherein his there was a serious injury onto his head, and he has been made a permanent, temporarily total disabled for almost 6 months. Okay, there's a compensation which need to be paid, but the insurance company has not paid it because there is something called as a proximate cause. Proximate cause means what is that exact reason because of which the situation has come in. And this guy who actually fell on the work space, okay, on the shop floor, okay, he was actually fasting. And because he is fasting, he has become anemic. And because he has become anemic, he was unconscious. And because he was unconscious, he fell on the floor and he got hit on his head. So what is that proximate cause because of which this claim has actually turned up, this event has actually turned up? It is because he was fasting. So in this situation also, the claim is non-payable. It is a non-payable claim. I hope this gives you a lot of clarity. Okay, right? So in insurance there are 7 principles, right? And out of them, one of the principle is the proximate cause, the one we just mentioned over here, right? Okay, so proximate cause is the exact reason because of which the event has actually triggered off. Okay, if that is payable, everything else is payable. If the proximate cause is not payable, then the claim is not payable at all. Okay, right? Is this clear? Good. Thank you. Thank you. So let's get into the third situation. Third situation wherein the claim under the personal accident policy becomes non-payable. Okay, and in this situation, I would like to deal with the road accidents. Okay, so we are actually selecting 5 different scenarios of road accidents. So all the 5 different scenarios I am going to cover it under this road accident. Okay, the first situation, there is no or lapsed driving license. You're going on your vehicle, you met with an accident, and there's a serious injury, you got hospitalized, or it could be even a death. But the person who was actually driving the vehicle, if there is no license for that person, or the license which he already had got lapsed, that means he is not eligible to drive that vehicle on the road according to the law of the land. So because he has done an event, he participated in an event which is against the rule of the land, the law of the land, the claim is not payable. It is non-payable claim. Though he would have actually learned how to drive his vehicle, but he doesn't have the license, or his existing license is lapsed, that is not payable. The claim is not payable. Okay. Now the second scenario in the same road accidents, if you actually look at, so we have something like goods carrying vehicle. We have how many times we have seen people, especially during the marriages, we have seen in so many outskirts and in few of the villages, what we have seen is they get in goods carrying vehicle or a tractor kind of thing, and which is actually need to be used for a specific purpose. A goods carrying vehicle need to be used for goods carrying only according to the law of the land, right? Okay, but if the same goods vehicle, the goods carrying vehicle, is being used for public carrying, and that vehicle met with an accident, that means these days we see a lot of small trucks like the DCMs and other small vehicles. They all the people, they get onto the vehicle and they keep standing on the boundaries of the vehicle, that carrier, right? Which is actually not intended to carry the people. It is intended to carry the goods. Okay, but it is somehow like if people use it, and if that vehicle go and met with an accident and there's a serious injury and so many people got injured in that, and if say suppose you are also one among them, in that situation also the claim is not payable because you boarded a vehicle which is not intended for your travel. Right? Is this clear? I hope you're actually getting the clarity on why few claims are repudiated or not payable by the insurance company. Okay, Now, we have seen two incidences in the road accident. Let's see the third incident. Okay, the same road accident. Okay, the road accident happens wherein the vehicle is driven by wrong side. It is driven on a wrong side. Like we have seen these days, like people, instead of going to the left side on the road when they're approaching onto the main road from a bylane, if they're approaching the main road, they have to take the left side. If it is a one-way traffic which is going on, but they are taking a right side, which is on a wrong side if they are driving the vehicle, and then they met with an accident from the other vehicle which is coming on the right side, or anything would have action, or they would have gone and hit some other vehicle, but they are driving on a wrong side. Even in those situations, the claim is not payable at all. Okay, right? I hope this is giving a lot of clarity. Nowadays, you can also see the people, at least by listening to this, if somebody can stop going on a wrong direction on the main road, that will help to reduce the claims, the non-payable claims. Okay, so this is the third situation what we have seen. Let us also see the fourth situation of the same road accident. Okay, if somebody is jumping a signal, how have we seen people jumping the signal? They are very fast, they just want to cut the traffic. They want to cut even though the red signal, okay, the orange is coming. They just want to make a swift drive and get into the next side of the crossroad. We have seen such situations, right? I hope none of you have been doing it or have done anything like that in before. Even yes, don't do that from now onwards, okay? Because if you are signal jumping and you're crossing the crossroad when you're not supposed to do that, even in this situation, the claim is not payable at all. Okay, right? I hope this is giving you a lot of clarity, right? If somebody is actually jumping, you can just hold them and say, don't do that, your claim will never be paid. Right? Okay, we also have another situation. The fifth situation what we want to discuss and make you update about this is about the same road accident is if there is overloading of the vehicle. If there is overloading of the vehicle, okay, say suppose it is a 25-seater public carrying vehicle, and the people have booked it for say marriage, and it is not 25, probably 58 people have got into the vehicle, and then the vehicle met with an accident or it toppled down. Do you think the claim is going to be paid? No, because knowingly you have actually boarded on to a vehicle wherein the more than the required number of people who have already boarded. So knowingly you have actually taken the risk. If you have knowingly taken the risk, it is going to be your risk. That risk cannot be transferred to the insurance company, and insurance company will never ever pay that claim. It becomes a non-payable claim. I hope this gives you a lot of clarity, right? If yes, just key in yes in the chat box. How? Thank you. Thanks a lot. Okay, so this is the third situation of the road accidents. So we have seen 5 different scenarios. How the road accidents, if it happens, and the person is also covered under the personal accident policy, but still the claim is not payable. It becomes a non-payable claim, right? Okay, let's get into the fourth situation. The fourth situation is if there is no external injury. We have actually seen a situation wherein the person got met with an accident. He became unconscious, but on the body there is absolutely no injury at all. There is no external injury because of an accident. Do you think it is going to be payable? No. The claim will be repudiated and it becomes a non-payable claim. Why? Because accidental death, if you actually look into the definition kind of thing, It is an unintentional, unforeseen, and uncontrollable. Unintentional, unforeseen, and uncontrollable means of impact. There should be an impact resulting in external injury which is leading to death. So there is an uncontrollable and unintentional and unforeseen. So unintentional, unforeseen, uncontrollable external means of impact leading to an injury, an external injury, which leads to death. So if there is no external injury which has been seen on the body, then the claim is not payable. Then the claim is not payable. Of course, it is contestable under the court of law, but it is not payable at all. Okay, right? I hope this is giving you a lot of clarity. These are the real life situations which we have encountered and which have dealt with those kind of situations. Let's look into the fifth situation. The fifth situation, if you look at, if the coverage location defined under your policy, if the coverage location defined under your policy is different than the place where the event has actually happened. Probably the accident has really happened, but the location defined under your policy is different, and the location which is defined, which wherein the real accident happened is different, then also the claim is not payable at all. Let's go. I know I got in request here. Yeah, I'll go a little deep so that you will understand this particular situation. Okay, so if you look into the coverage of the location, it is based on the location and the timing. See, when the people bargain for a better rate and reduced premiums, this is where the tickling of the conditions will happen. Okay, there is something called as only work location and work time is actually permitted to be covered under the policy. That means if, say, suppose the company has taken a policy for all its employees, so company may think that I want to cover my employees only at the workplace. And if, say, suppose the employee met with an accident, but it is while he is actually going home or coming to office. Okay, in those situations, if it happened, because the location is different, the work time is different, so the claim is not payable. But in case if the company or the person has taken a policy wherein anywhere in the country, if he is there, and even if it is, say, 24/7 coverage, if it is there, then the claim becomes payable. But the same person, if he goes out of the country on the official work, right? But still he met with an accident, then it becomes non-payable. So we need to have a coverage wherein it is anywhere in the world coverage. Anywhere in the world with 24/7 coverage, we have that kind of coverage within your policy, then that's the best. Probably you'll be paying a little more premium extra, but it's always worth to have that kind of coverage, right? Okay, so that's about the fifth situation. So it is you need to be very clear. You need to be very clear what kind of personal accident policy are you taking. Is it covering only your work location and only the work time, or it is 24/7 and also anywhere in the world? It's worth paying that additional premium to get the best coverage. Okay, right? So let us summarize still here, right? So the coverage location is one which need to be taken care, and the road accidents, what are the different kinds wherein it can be covered? Okay, that we have seen, right? And then we have also seen if there is no external injury, then it is not payable, right? And we also seen if somebody is intentionally trying to do something, like it could be a suicide, or it could be an what do you call an anemic kind of condition and then met with an accident. Okay, an anemic is because of an fasting situation. Even then, it is not payable. Okay, right? So let's get into the sixth situation. Okay, in the sixth situation, if you look at, if there is a medical extension coverage which is there inbuilt into your policy, okay, that medical extension becomes not payable if there is no, if it is like a dependent benefit. The medical extension is a dependent benefit. How does it matter? If say suppose because most of the organizations what they do, they give the medical extension. That means the medical expenses can also be covered if there is a hospitalization required because of an accident. Okay, it is payable up to 40% of sum assured, 10% of sum assured, or 40% of the total claimed amount, whichever is less. 10% of sum assured or 40% of the claim amount. Okay, so both of these situations will happen. They will trigger the claim only if the claim is payable under the base policy. Okay, so there should be an accidental hospitalization which is mandatory. At the same time, there should be a claim under the policy, under the base policy. That is whether it is a death or disability. If the death or disability has not happened, then the medical extension coverage is not payable. Many of the people they get confused over here. Okay, they think that the medical extension is an additional coverage which has been given to them. Suppose they have taken a 1 crore of coverage of personal accident policy, and 10% of 1 crore is how much? 10 lakh rupees, right? So 10 lakhs of medical benefit what we have. No, it is 10 lakhs of accidental medical hospitalization provided if the base claim also triggers. The base claim is either the death or the disability. If none of these base claims are triggered, then the claim is not payable. Okay, so have this clarity. So your medical insurance is always keep it as a separate coverage when compared to your personal accident coverage. If you are getting these medical expenses under the personal accident policy also only for the accidental hospitalization, it's okay, but take it as an add-on. But don't deny because it is there. Don't stop paying or don't stop taking the normal medical insurance policy for yourself and for your loved ones, that is your family. Okay, I hope this is clear, right? And then let's go to the seventh one. The seventh situation, if you look at, okay, if there's a non-submission, if there is a non-submission of income proof, the claim happened, the claim is also payable, right? But if you have not given the income proof to the insurance company, there are some limits until which the insurance company will pay the claim without any income proof. But most of the claims, the income proof is mandatory. Because if there is no income proof, how does the insurance company ascertain your claim amount? How can the insurance company ascertain whether you can be payable that claim or not? Let's go a little more deep into it. Okay, so there is a death claim. If there's a death claim which has actually happened, okay, and then there is a disability claim. If the death claim is suppose 2 crores of coverage what they have taken. 2 crores of coverage means at least he need to have divided by 200. That means almost close to a lakh of rupee of income. If that income is not there, okay, then how can that person be given that policy? So that's the reason they normally ask for an income proof if you're going above 50 lakhs of coverage. And at the same time, if at all, the temporary total disability means it's actually called as weekly benefit. The weekly benefit, let me tell you how does this weekly benefit works. They actually calculate your earning per week, and because of an accident, if the person need to be on the bed for suppose more than 3 months, so they will calculate your income earned on a weekly basis for the number of weeks you have been disabled totally, right? But the period is temporary, right? To that extent, weekly salary will be given by the insurance company to the person. But to calculate that, you need to have your income proof. The income proof is not there, the insurance company cannot pay the claim, right? Even your personal total disability. or whether it is your permanent partial disability. So the the personal accident policy can be given only to those people who are the earning members of the family. That's the real logic. But these people, the insurance companies, they are also giving even for the dependent spouse, but only up to 50% of sum assured. And sometimes, like, we also have some products in the market wherein they are also covering the children. But none of the parents would love to have the money because of an accidental claim of their children, right? Okay, so it's always better to have the coverage for the earning members of the family, and then the dependents will be like the nominees. Okay, I hope this gives you a lot of clarity, right? Okay, so there's a non-submission of income proof while you're processing the claim documents, then the insurance company cannot pay you the claim. Okay, so even that is something which is mandatory. Then why do you think it is actually mandatory? Because there is something called as insurable interest. They need to identify if a person is getting coverage, to what extent the insurable interest is covered, and who is the person who is actually getting the claim. So this is one of the principle of the insurance. Out of the 7 principles which are there, this is one of the principle. And if they can't ascertain the amount of coverage which need to be given, then they can't give the policy. They can't give the claim. Okay. See, in life insurance, what happens? The claim, the insurable interest is ascertained while issuing the policy. And in the general insurance, what happens? The insurable interest is being judged when there is a claim. Okay, so taking a policy is very easy in a general insurance segment. Okay, but getting the claim, you need to prove your insurability. If the insurability is not proven, then the claim is not payable. Okay, right? Let us go to the 8th one. In the 8th situation, if you look at, if there is no nominee, which is mentioned under your policy, to whom will the insurance company pay the money? The claim is not payable, right? But if you really want it, then we have to really struggle to get the legal hire certificate, right? So until unless there is a legal hire certificate which has been issued by the government authorities and the court of law, and that need to be submitted, only then it becomes payable. So that's the reason why you are, what are the insurance policy that you take? Make sure you are actually mentioning the nominee under the policy, because that gives a lot of ease to actually process the claim when there is the claim settlement need to be done for the insurance company. Okay, always do mention the nominee under your policy copies. Okay, yeah. So mentioning that if there is no nominee, the claim is not paid, right? Okay. Now the ninth situation is, if there is no FIR which has been filed, the accident happens, the impact happens. It could be a vehicle impact, it could be anything which happened, right? FIR is a must for processing of the claim. But there is an accident which happened. It is not an external accident. Probably it is like slipping of the of the leg in the bathroom, and then they fell, and then the person got hospitalized, and he is disabled for say suppose 6 months, and the temporary total disability, that is the weekly benefit, need to be processed, even the medical benefit need to be processed. Then instead of FIR, at least the hospital can actually provide MLC, that is medical legal certificate. Okay, that if there is an external party involved in that accident, okay, then FIR is something which is mandatory. If it is like an own damage which happened, but it is an unintentional own damage which has happened, it's an accident by true sense, then MLC given by the hospital for your treatment. During the treatment, they actually put that medical legal certificate. It is same like FIR or the MLC. What does it contain? It actually contains like what exactly situation happened, when it happened, how it happened, So what is the proximate cause? What is the exact reason why it happened? And what is the damages which have been happened? So it's a proper authenticated recording of the facts. And if those facts are not there, if the facts are not recorded, then the claim is not payable. Okay. So why? Because the proximate cause, the exact reason why it happened and how it happened cannot be established. If the reason is not established properly, then it becomes really difficult for the insurance company to pay the claim. Right? Okay, I hope this is clear, right? So if the proximate cause cannot be ascertained, then the claim becomes non-payable. There will be a lot of confusion for the insurance company on what basis the claim need to be paid or even to be denied. Okay, right? So the last situation in most of the things wherein the claim is not payable. Let me ask you one question. Did anyone who's there in the webinar now, have you ever gone for any challenging sports or adventuring sports like scuba diving and then the tower fall or even the bungee jumping, right? Have you ever gone or have you ever done it? Or a small, what do you call, a runway kind of thing. Have you ever participated in that? Yes, right. Some or other time, like we really wanted to enjoy. We went with all the friends and the family, and we really want to enjoy that game. And there's a roller coaster which has been there. Okay, right? Let me caution. Okay, on all these adventurous sports, okay, or trekking, there is always a self-declaration which need to be signed. If there is a self-declaration which has been signed stating that I own my risk, knowingly I am actually participating. If you have written that, even though there might be a lot of safety standards which the people are actually maintaining in that particular adventurous sports, but still they take your underwriting. They take an underwriting stating that you own your own risk. You are participating with your own will, and then you participated in the adventurous sports. Then an accident happened. Do you think the claim is payable? No, never. Because knowingly, intentionally, you have accepted the risk. If intentionally you have accepted the risk, how come an insurance company will pay you the claim? Right? It's almost like self-inflicting injury. It's almost like a suicide. Right? So the claim is not payable at all. Right? Let us go through the situation. If there is an intentional participation, if it is knowingly somebody is participating, okay, in some adventure, and the adventure here, it could be like your bungee jumping, your trekking, and also even racing, right? So all your adventure sports, just like this, like whatever are there, wherein you give your underwriting, you actually declare that you own your risk, right? And knowingly you are participating that there is a risk. If you do that, then your personal accident claim is not payable. Okay, right? So with this we have actually finished the entire 10 non-payable claim situations, right? And if you need any assistance, we are always here. Like you can actually take in photograph of the QR code, or you can also even dial up this number. It is 7569-645-645. Me and my team will be always there to help you out in processing of your claim, or even in choosing the right kind of a personal accident policy for yourself and for your loved ones. Okay, and with that, let's now enter into the next section. There is a think and thank. Okay, what are the things that that you think you can actually have under your personal accident policy. Okay, there's some optional covers which are there, like somebody says, like, there's an education grant which is given to the children, right? There's the transportation of moral remains of some amount which they give, and then the travel expenses for a relative for to come to the location to take care of you in the case in the incident of an accident, right? And it could be a vehicle or a residence modification because of an accident, whatever the cover, right? So and purchase of blood, and also there are so many other things like your imported medicines which can be used, okay, which you have to import from the other countries, right? So even that can be covered under your policy, right? There's also some policies wherein they give the cumulative bonus. There is no claim, they give some cumulative bonus. I think it is 5% every year they give, and it can go up to 100% of your sum assured, something like that. We have such kind of products also in the market, right? And there's a hospital cash benefit, then home convenience benefit. Okay, even those things can be taken as an optional benefit. It is very small premium which you may have to pay, probably few hundreds. It's not even 100 in few companies. It is just 55 rupees extra which you have to pay, right? So it's worth paying that additional premium and opt for all those options to have a very comprehensive coverage for yourself and for your family. See, we are here and we really want to take care of our entire family. Please do take care of your family. Smile, the happiness within your family, and these small little things will give you a kind of a comfort for not just for you but also for your entire family in having a regular source of income even in the event of happening of any eventuality, right? Okay, so let's get into the action points. We are always busy, and we know that we need to do a lot of work for ourselves and for our family, but we give a lot of importance to all other activities than our family. That just happens because we are focused in doing the work, and we always wanted to do our work, but it just goes with the time, and we just tend to forget. Okay, so in the busy schedule, the action points, what you people are going to do, all right? First and foremost thing, take out your personal accident policy copy. Take out your policy copy. Okay, go through the entire details of the policy. Who is the nominee, whether your name is mentioned correctly, and is it matching with the income proof, with the proof of identity what you have, and do you have the income proof matching with the coverages what you have taken, right? And do you have the right email ID, mobile number, right? And your nominee details, whether they have mentioned it correct, the relation with you, is that mentioned correct? Okay, and whether you have taken the right risk occupancy, your occupancy, is it been selected correct? If it is not correct, select the right one. Pay that additional premium. It's worth it. Because if there's a claim, then all this real effort and the real reason why you have taken the policy is completely defeated. So it's of no use even when you take the policy. Please check through the policy. Okay, and request your advisor to come home and discuss with him all these points. And if say suppose you are not finding him, don't get worried. We are always there. You can dial up this number 7569 Me and my team will be always there to help you out in actually reviewing your entire existing policy. And say suppose you doesn't have the personal accident policy, don't get worried. You know a person with whom you can deal with, please go ahead. You need me and my team to help you out, please dial up this number 7569 This is the number on which me and my team, we are always there to help you out. Okay, and the real purpose is only to provide you the clarity on what are the policies that you have already purchased or planning to purchase, such that you have confidence about all those policies that tomorrow in case of any eventuality you will have the claim settled by the insurance company. Okay, right? And then discuss. This is something, the culture which really we wanted to develop through our channel over here, right? It is discussing insurance on dining table. We want everyone to discuss the kind of policies what they have, the kind of coverages what they have, not just with the with themselves, but also with the family members. Because tomorrow if there is an event which happens and we are not there in the situation, they should know where the policies are. They should know what are the coverages which it have, and they should know how to claim out of the policies. So discussing, we want to develop this culture of discussing insurance with the family members on the dining table. Okay, please. It's the loved ones for whom we are actually taking the policy. If they don't know where are the policy copies and what are the coverages what they have, they don't know how to really get the best out of them in the case of eventuality, right? Okay, and then keep all your documents readily available and in a common place with all your family members, which should be known to all your family members. Okay, so this is something which we really wanted to give you as an action points. And you need any help, if you need any help, me and my team, we are always there with you, right? And there is a QR code here, right? You can actually scan this QR code and send across your details. We'll get back to you. Or you can also dial up this number, which is also mentioned over here. It is 7569 645 645. So you have the QR code, you also have your the number over here. So you can actually select, and we'll be always there to help you out, right? Okay. So with this, see, the QR code is also here, right? Okay, and the number is also here, 7569 645 645. Okay, right? So with this, we come to an end of this webinar series, webinar episode, the 29th episode under the bi-monthly webinar series of Get More from Mallapuram. Okay, with that, we thank you. We thank you, all of you, for joining us on this episode and of the topic, the 10 non-payable claims under the personal accident policy. Thank you. We thank one and all for being with us on this webinar. Thank you.